Hey, welcome back everyone. It is time for another red hot cover call video. Well, hey, look, in this video, we're going to talk about how I use the cash secure put on 2 trades. I'm going to show you exactly how we did a small ball trade where we only used 5 contracts. I think that was about $22,000. Then I'm going to show you another one where we used DPST. We used 10 contracts. And we used a little bit more money. In fact, we used $94,000. Now, these are 2 trades that you can do. These are cash secure puts. Basically, that means this. You are going to put up the cash to buy somebody's shares. Now, what we're going to do is this. We're going to pick the price for which we want to buy those shares, and we're going to give that person, whoever that person is, a time frame to do it. Now, my first example, it's going to be this Friday, 2 days away. And then in the second example, it's going to be next Friday, which is about 7 days away. Now, look, if you like the idea of being in retirement or getting into retirement or thinking of retirement and generating cash flow, well, it's going to be writing covered calls and selling cash secure puts. That's what you're going to have to learn. The 9 to 5 right now is funding all of your dividend paying funds. I know it, because I did it. Then I retired, and I retired when I was 55. Now, I retired when I was 55 because I learned how to write cover calls and sell cash secure puts, generate all that incredible premium, and we bought dividend paying funds, passive income investments. But for me to live off of my passive income investments, well, I was going to need to write a lot of covered calls and cash secure puts so I could have all of that passive income. And I have. I've been doing this for over 10 years. So when I show you these 2 trades, just know that I put my own money at risk. I am in retirement. So this is my retirement money that I'm using. And I do this for my membership. All of my members see all of the trades that you see right here in front of you. I don't know if you can see this if you're on a phone, but these are all covered calls and cash secure puts that are going to expire December 12th and December 19th. All of this. So what we do is we do a lot of this covered call and cash secure put selling at the membership. The members see it all. You get a phone app, you get an email, you get a blog post, you see me get in trades, get out of trades. All you have to do is follow me. Follow me because I put on real trades. This is my money. And if I lose my money, I'm back at the 9 to 5, and that's not happening. So let's go ahead and get to this. I know you want to generate cash flow. You want to learn how to generate the kind of cash flow where you can retire early. I know you do. So, hey, look, if you like anything you hear today, subscribe to the channel. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. Now, what I'm doing is talking about these 2 trades right here. You can see one of them is on SOXL. That's the 3X leverage ETF to the semiconductors. It's leveraged. We use leverage because we can get 3 times the premium. We're still using the semiconductor ETF. We're just using the 3X leverage version. The second trade is going to be DPST. This is the 3X leverage ETF to the regional banks. Leveraged so we can make more premium. Have we added risk to these trades? Well, if you like the semiconductors, we haven't added any more risk by using leverage. If you like regional banks, we haven't added any more risk if you were going to invest in the ETF that invests in those regional banks. We just use leverage so we can get more premium. At the membership, volatility does not equal risk. I've been using leveraged ETFs for over 8 to 9 years because I realized that the underlying assets have not changed. If we're going to invest in the SPY, why not invest in UPRO? The underlying is the same. It's the S&P 500. This is what I do. Instead of using the semiconductor ETF, which is considered a 1X, I'm going to use SOXL, which is a 3X. It's still the same investment. We have added volatility. It's going to move 3X one way or the other. But we love that because it pays us those fat premiums. We don't have NAV erosion. See, when you invest in those high-yielding dividend-paying funds, you have NAV erosion. Because what happens is they write covered calls against the funds or shares or whatever they're writing covered calls on, and they distribute that dividend to you. And what happens is usually it falls when the market falls, so it doesn't recover. And the reason it doesn't recover is because you're capped. You are capped to the upside. Well, when we write covered calls, we're going to go ahead and make an investment in that stock or ETF, and we're going to get out at our cost basis. Our cost basis being our NAV. And along the way, if we can generate covered call premiums like I'm about to show you, then we've added to the pot. And we have had no NAV erosion. Why? I'm getting out of my cost basis. We do this all the time. We're going to go ahead and write these 2 cash secure puts. We could be assigned the shares. And if we are, we're going to write covered calls to get out at our cost basis. We invested X. We're going to collect X. And then what's left on the table? The 2 selling premium profits. We take that money and we buy a dividend-paying fund that pays us passively. And we do this over and over again. At the membership, you see all the trades. You're going to get a 1 free month offer in the description. I'll tell you what, I'm signing up over 2 people a day. I've had the membership for over 5 years. You get to see the world through my eyes. And of course, you get all the exclusive videos I do for members. You get to see all my trades, including my kids' trades. You get all the tools and all of the video libraries on how to do the deep in the money covered call, how to do the poor man's covered call, for which I have a DPST trade that's going to come off the board, making me over $30,000 since September. See, this is what we do. And we have to have success because I don't have an endless portfolio for which I can lose money. I've got my money. I've got to trade it. I got to make money. And that's what I do. So let's go ahead and look at these 2 trades. I know somebody's out there right now saying, brother man, get to it. So let's take a look at the very first trade. This is going to be SOXL. Now, SOXL, again, is the 3X Levers ETF to the semiconductors, right? You know all the big semiconductors. We got AMD, NVIDIA, and all the others. Well, that's what we're investing in. Now, we're just going to go ahead and 3X leverage that so we get some good premium. So here is the trade setup. When SOXL is trading for $47.99, I go ahead and run the numbers. 500 shares. We're going to go ahead and pick the 46 strike. So what does this mean? The stock's trading at $47.99. I'm going to go ahead and put up the money to buy somebody's shares at 46, 500 shares. Now they're going to pay me a per share premium because remember, my money has to sit on the sidelines till the expiration. Now the expiration is actually going to be this Friday. So that's 2 days. So for 2 days, do the math. This is 92 cents per share or $460 in cash flow. Remember we talked about cash flow at the beginning of this video? That's the cash flow I'm making from this trade. Now, once the trade is placed, somebody out there is going to take this trade, right? Options move. Options have open interest and volume. Somebody's going to take this deal because somebody wants to play the move in the option price. Now, whether they make money or not, I don't care because for me, this is my trade. This is what I want. So when it's trading at $47.99, I tell the greater stock market, look, I'll buy your shares at 46 and I'll put the money out there. It's about 22,000. Now, 500 shares. You have to do this in 100 share increments. So that's going to be 5 contracts. Remember over here on my total income tracker, which by the way, go to cptdashboard.com. I have all these free spreadsheets for you. You don't have to be a member. Go to cptdashboard.com and get your total income tracker. You always have to track your trades. This is mine. These are all the trades I have actively right now. Notice here is that same trade we're talking about to assign me their shares at 46. Now, the only time that's going to happen is if SOXL were to fall from $47.99 down to below 46. This is when the market maker is going to assign me those shares at 46. If the stock over the next 2 days were to drift lower but finish higher, I am not assigned those shares at 46. That's not what I sold. I sold the 46. I collect 92 cents. And as we looked at our last screen here, that's going to be 2% cash on cash. Man, this is beautiful. $460 in the wallet. I don't start losing money until the stock falls below $45.99. This is 4.15% of downside protection. The stock in 2 days will have to fall 4.15% before it challenges the 46 strike. And this is what I love because the members see the second trade we would do. Let me show you this. This is that trade the members see. They got this. Check this out. We're going to go ahead, and if we're assigned the shares, I want you to focus right here. I don't know if you can see this, but this is the trade, and that's the trade right up. But we always have trade 2 lined up. See, a big problem with many covered call writers, cash secure put sellers, they're kind of in shock when the stock falls from $47.99 down to 46. And in fact, if it falls below 46 and goes to 44, they're really in shock. I show the members we have 2 trades ready to rock. And that's what we do. So when I do the first write-up, the reason I got involved in this trade, we also talk about the second trade and what kind of profit we can make with the covered call. Remember, it is a cash secure put. I will buy their shares at 46. If I'm assigned those shares at 46, well then I'll write a covered call where I'll give somebody the right but not the obligation to take my shares away from me at 46. They'll pay me a per share premium. And then the stock hopefully moves higher. They take my shares, I get my cash, and I have these 2 very large premiums, premium profit because we use leveraged ETFs. That's trade number 1. That's a beautiful cash trade. Why is that a beautiful cash trade? Because you get the 4.15% of downside protection, so the stock can actually fall that far before my 46 is challenged. That's 2 days. It could happen. I highly doubt it from today's news from the Fed. Now, I promised you trade number 2, so here it is. This is DPST. Now, what I do with the membership is talk to members about chart reading. This is one of the number 1 fails out there. Right now, a lot of people are going to wake up tomorrow and probably buy DPST right here. Problem is, DPST is going to do what it always does, and once it breaks the Keltner channel top, there's going to be bag holders. They're going to buy at the high, and DPST is going to get sold off. This happens every single time it pops above the Keltner channel top. Okay, look at that. Every single time, every single time. Now, this could run a little bit because of this news from the Fed, and I get that, right? Well, I am involved right here, so we're going to run this up. But I show the members, we're going to pick the strike price for which gives us downside protection. We do not be the sucker right here. Ultimately, when they hand the bag and it falls, we're not going to be that person. We are going to use downside protection, collect less upfront cash flow premium, and we're going to place that trade. So right now, DPST is rocking. When I placed this trade, it was a little earlier in the day. So you might look at these numbers and say, bro, this does not apply, but it does because you'd have gotten this email. Here's the deal. DPST trading 104.65. We do 1,000 shares. We're going to go ahead and select the 94 strike. This means I'm putting up the cash to buy somebody's shares at 94. They paid me $2.05 for that, or 2.18% for basically a week and 1 day. This expires on the 19th, next Friday. I have 10.18% downside protection. I don't start losing money till this thing falls to $93.99. This is going to be $2,050 in the wallet. Take a look at this. If DPST were to fall from 110, this is incredible, 110, I would be assigned the shares down here right around the Keltner channel mid. And that's what I show the members. We have chart reading classroom videos that you can watch. I just did one yesterday. You have a phone app that has all those videos in there. The Download Hub has videos where we talk about chart reading. and we talk about where we get involved. So we're not the bag holder. We're not the bag holder like many of you are. And I know you are because I was you at one time. I was you 10 years ago when I started this cash flow journey. But over the years, I've developed methods. I've been kicked in the nads so many times. I learned new methods that I've been using for years, and my members benefit from that. I'm telling you what, if you like anything you hear today, what I want you to do is in the description below, get your 1 free month offer. Join me. Make 2026 your year. You finally say, hell with losing in this stock market. Look, you can pick a stock and it might go higher. But at the end of the day, we make money trade after trade after trade after trade, just selling premium. Hell, you don't even need me. Just go to YouTube and really learn how to sell premium and then do it. Selling premium, writing covered calls and selling puts, that is the golden goose of investing because it gives you a golden premium profit. I am not hocus pocus. This is all out there. I have over 650 videos showing you from day one. I want you to take your financial future in your hand and get rid of all that crap, dividend paying crap, where NAV erosion has caused everybody to absolutely feel kicked in the ribs. If you're going to deal with single stocks, let's do what I do and let's make money on the front side selling premium, then buying quality high yielding dividend paying funds. And oh, by the way, as a member, you see all the ones I buy and I live off in retirement. Hey, look, I'm going to leave it right there. In the description below, get your 1 free month offer. Would love to welcome you aboard. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.